Kia ora, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, everything you need to know in 90 seconds at 9 o'clock, with news of a big bump in the road today. Worries about spreading contagion from troubles in China's property market is sending global equity markets into their steepest decline in months. But the sentiment fall is broad, affecting currencies, interest rates and commodities. And the market sell-off comes as both Japan and China have had long holiday weekends. But that has not stopped angry investors and property developer Evergrande turning out to continue their besieging of the company's offices, even holding some managers hostage. The firm can't sell assets fast enough to service its impending bond payment obligations. The company blamed ongoing negative media reports that have dampened the confidence of potential property purchasers. There is no sign yet of a Beijing bailout. China's central bank, however, is to issue a regular policy statement tomorrow, and it may try to quell some of the crisis. The US Fed will be watching closely too, and they report next on Thursday. Elsewhere in the world, there was not a lot of economic data released, but one lone bit deserves attention: German producer prices. They rose much more than expected in August and are up 12% from a year ago. The month-on-month rise from July was an even faster pace. German industry hasn't faced pressures like this in almost 50 years. A good part of those cost pressures are from freight in the global supply chains, and that is not easing off, with the Baltic Dry Index rising yet again, now to 12-year high. The sharp drop the weekend futures market suggested might happen on Wall Street has happened. The S&P 500 is down a major 2.2% in afternoon trade to open their week and falling. Overnight, European markets fell hard, with Frankfurt down 2.3% and London down 0.9% to bookend their Monday trading. Yesterday, both the very large Tokyo market and the Shanghai market were on holiday, saving them the embarrassment, but the Hong Kong market traded and fell a sharp 3.3%, driven, of course, by Evergrande. Locally, the ASX 200 ended down 2.1% yesterday, while the NZX 50 got away relatively lightly with only a 0.4% fall. US Treasury yield opens today at just on 1.31% and down 5 basis points from this time yesterday. The price of gold will start today at $1,763 an ounce and up $9. But oil prices have drifted another dollar lower overnight, so in the US they're now just under $70.50 a barrel, while the international Brent price is now at $73.50 a barrel. And the Kiwi dollar opens today at just on 70.3 US cents, a little change since this time yesterday. Against the Australian dollar, we're just under 97 cents Australian. Against the euro, we're just on 59.9 euro cents. That means our trade-weighted index starts today at 73.7 and now below the top of the 72 to 74 range of the past 10 months. And the Bitcoin price has fallen today and hard, now down to $44,055, down 7.1% from this time yesterday. Volatility in the past 24 hours has been extreme too, at just under plus or minus 6.2%. We welcome your feedback on these issues. Leave a comment below or on our website. Kia ora, I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.